Welcome to The Property Perspective, a podcast by Knight Frank Australia. We'll share expert analysis from industry leaders, focus on key trends and forecasts, and bring you the latest topics shaping Australia's property market.
Well, good afternoon, everyone. Welcome to the latest episode of Knight Frank's Property Perspective. A very interesting discussion, I'm sure, we'll have today on what is a really hot topic, not only in real estate markets, but in social infrastructure, in business in Australia. Generally, the world of data centres has sprung to great attention with the recent acquisition of AirTrunk by Blackstone. We're going to touch on that today. We're going to touch on the market, some of the challenges, the opportunities, but also where it's come from. We're going to do that with my two colleagues. We've got Fred Fitzalan Howard, who's our data centre lead across the APAC region. So looking forward to hearing from his insights. And I'm also joined by Angus, Klem, head of industrial investments, who's been involved in a number of local land transactions involving where data centres is the ultimate end use. So a very exciting sector. Welcome both.
Thank you, Ben.
We might start with you then, Fred. And before we perhaps get on to what's happening now, why don't we just take a step back and talk through the evolution of the sector? How did we get here?
Brilliant. No, thank you very much for having me on. The data center sector ultimately started in the mid-90s in key global financial hubs. So Frankfurt, London, Amsterdam, Paris, Singapore, Sydney, Tokyo, Hong Kong. And effectively it sprung out of the emergence of the key trading banks. So in order to facilitate global trade, within the office buildings of these large banks, they would have computer rooms, server rooms, mainly in the basements of these office buildings. And what became very, very clear, early doors, was the fact that these assets were not fit for purpose. So if the power into the building was to go down or the fiber infrastructure was to go down, so would the bank's trading capabilities. And that's all the emergence of the early investors, the early operators, the likes of Equinix, basically saying, why don't we build third-party dedicated data center buildings in close proximity to these assets where companies could host their IT infrastructure. So these were much more reliable, multiple incoming power feeds, batteries, generators to back these up, physically secure. But most importantly, what they did was create an environment where multiple banks and financial services industries could locate in the same building. And so those were the early data centers. The sector was completely unknown to most people. And effectively, we had sort of 10 to 15 years of steady growth in this sector as the world started coming online, particularly in those tier one markets. The likes of Equinix floated, had the longest revenue increase streak on the S&P 500. And then we saw more entrants into the sector from an M&A perspective. But then actually the sector changed. The first key turning point in the sector was sort of the early teens. Effectively, we saw the emergence of the cloud. So Amazon's Elastic Cloud, the idea that actually instead of companies, say banks or the likes of even a company Knight Frank saying, instead of hosting your co-location infrastructure in a data center or in your own office, actually, why don't you let the likes of Amazon or Microsoft or Google host your IT infrastructure on their cloud platform? So imagine it like the WeWork model of data centers. So the likes of Amazon would take an entire building lease and bring in companies under their own banner. So that was 2013-14, we saw that emergence. And again, the market continued to grow, but again, relatively quietly and in the shadows compared to the rest of the real estate market. But then COVID struck in, say, March 2020. Everyone was working from home. That instigated a huge number of businesses moving onto cloud platforms in order to facilitate the working from home evolution. But more importantly, what it did was actually the investment market woke up to digital infrastructure as an investable asset class. So CIOs, CEOs saying, instead of investing in office buildings, hotels, leisure during this very, very divisive time, actually the whole world can shut down, but digital infrastructure remains incredibly vital and a very attractive asset class to invest in.
Indeed. So, I mean, we'll come on to AI and the latest iteration and the enlargement of schemes. But were we seeing then, I mean, you talked through the evolution there and the growth that came about through the advent and growth of cloud computing, but were we seeing at that point, if you like, over the last decade, up to 2020, if you like, was it, what was the extent of the growth of the sector at that time that could have been attributed to cloud, and was that resulting in a huge expansion in both the number of schemes and scheme size, or is that something that's more recent and associated with AI?
So the last decade has mainly been dominated by the growth of the cloud. So on a global basis, our latest figures effectively dictate the fact that 85% of global take-up is from the cloud, and that's dominated by those top 3, top 4, Microsoft, Amazon, Google, and Oracle. In this part of the world, we're also seeing, the Chinese cloud very dominant. But in general, what we're seeing on a global basis is structural change in terms of it's cheaper, more efficient, and more flexible to host your IT infrastructure as a large or even an emerging company with the likes of Microsoft or Amazon versus doing it yourself. So whilst, as I'm sure we'll talk about in a minute, all the chat in the market is about AI at the moment and the effects that will have on the data center sector, we're still very, very early stage in terms of the evolution of the cloud and how many companies are actually moving to the cloud. So that element of the data center sector is certainly not to be disregarded.
No, not at all. So we might get your perspective then on that, Angus. So obviously we've seen the sector come to huge prominence, I would say, over the past 2 years, but that's been the culmination of this 15-year long run, 15-year sort of evolution, as Fred has talked to. I mean, how have you seen that play out on the ground in terms of, given your day-to-day role looking at industrial land, I mean, how have you seen the data centre world sort of permeate into the investment landscape over that period?
It's actually been brewing for a lot longer time than that. We were doing deals in early 2000s to the switching houses, as they were called back in the day. So I think Global Switch and PSINet and these sort of big US-based companies. And at the time, it was fascinating because it opened up a whole new market. But nothing really has changed in that 20 years, in that they seem to be very much at home in the industrial landscape, due to the scale, the size of the buildings, and the underlying planning. So we have been doing transactions for effectively 25 years on these in different and I guess smaller sort of scale, but certainly the last 5 years has seen the ramping up of that. But it's nothing new, surprisingly.
And so no, not entirely new, but we're seeing a next level, if you like, of the growth over the past couple of years. So you, Fred, you talked of the growth of the cloud having underpinned the growth of the sector, and that continues to be the case. But on top of that, we've got this additional layer, don't we? So be interested in your sense of the quantum of the increase, and I've seen various charts on this, some of which are quite dramatic, and no doubt you've got some good numbers to talk to. But to what extent has the overlay of AI demand added to the growing weight of the sector in the demand landscape?
Hugely. I mean, the key thing to say on this is, at this stage, it's still very early days in terms of the evolution of AI and how that will affect the data center sector on a global basis. So, as a team, we keep very in touch with the US investors and the operators, because that's where the market's being driven by from an AI perspective. So in Asia, we're still behind Europe and we're still behind the US in terms of how that's actually playing out. But what we can say that's happening from a US perspective is we're seeing demand, treble or quadruple in certain markets on a demand perspective in terms of the size of deployment. So, when I first joined the sector, a large cloud co-location leasing deal was 1 megawatt. So that was a celebratory style deal to a Microsoft or an Amazon. We're now seeing 300-400 megawatt size deals buildings and campuses being taken down in single leases. So ultimately,
can you put that in perspective for people in terms of what that means? I mean, what does 1 megawatt, or indeed the 200 or 300, as you've outlined, translate to someone in terms of the land area, the size of scheme, the dollar value, and ultimately for the end user, if you like, to the consumer? I mean, what are we talking about in terms of
course,
power generation and or how would you? I'm not sure how you would quantify the volume of end use that you get out of such a scheme, but if you could attempt it would be great to shed some light for the audience.
No, of course. I mean, very loosely, we look at about 1 megawatt roughly translates on a GFA basis to 1,000 meters squared of developable data center capacity. So, as you can see, 400 or 500 megawatt single transactions suddenly start to take up a lot of room and consume a huge amount of power. But more importantly, the effect of that on the investment market on a global basis is that you're looking at multi-billion-dollar capex spends on single campuses, which was not the case 3-4 years ago. So I'd say 4 years ago, the average size data center build in a tier 1 market was probably 20 or 30 megawatts, so 200-300 million. We're now into the billions at the low end, effectively, in terms of what the market is demanding. So, and the key thing here is nowadays is scale. The likes of Microsoft, Amazon, and Google don't want to be taking multiple deployments with multiple different operators. They would rather deploy at scale with one. But that brings back to the point that I was going to mention earlier, in the fact that there aren't that many players out there that have that weight of investment behind them. So multiple hundreds of millions, the whole real estate and infrastructure market is there. But once you're deploying multiple billions into a single campus, the then investment pool becomes a lot smaller, because actually very few people have that buying power that they could deploy that into a single space. So, and
am I right in saying, so you're saying, did you say there for AI that's at the smaller end has topped out at a very high level, in a sense that for AI you're not seeing, so, but is it are we still then seeing smaller schemes developed to cater to the, well, traditional might be a funny word given it hasn't been going, the cloud's not been with us that long either, but are we still seeing smaller schemes to cater to that demand, or is that also being influenced by the larger scale of scheme that's coming on for AI?
Those cloud schemes are also being dragged up immensely as the cloud deployments are getting bigger and bigger. So in general, it's becoming a scale play. And that's why, as we were speaking about earlier, it's not just the data center operators now, but also the industrial developers coming into the sector and saying, we've got an enormous land bank and a huge weight of capital behind us and fantastic relationships with the data center supply chain and the power providers and the local planning authorities. Actually, we've got all the recipes to be a success in this sector as well. So scale is everything now, which is a huge change to, say, 4 years ago, when it was about connectivity and power and connection to the brand and, you know, reputational abilities. Now a lot of it is access to land and power and capital.
So on that point, on the access to land and power, Angus, I mean, Fred's thrown some big numbers at us there, which I'm sure we've all seen and read in the context of the growth of the sector. But to what extent can our market, I mean, thinking of Sydney primarily as our largest market, but referencing other cities too, how are we placed in terms of our ability to meet that demand compared to other locations?
There's two sides, but one is the existing landholder base, and there is, you know, some entities that do have the mass required, and think of the big guys in town, Goodman, ESO and the like. But let's just sort of take a step back. There's been a run on land the last, say, 4 years, whereby the data centres have come in, and due to the capex that Fred's explained before, the last few years has been 500 million. Now it's in the billions. They really want to control the land, because to take a lease is ineffectual for them. The capital behind these businesses want to own the freehold, and it's all around control. So what they've been doing is coming in and acquiring land at a premium to industrial values, and paying, you know, in many situations, a eye-watering amount of money over and above, I guess, the going land rate for industrial. But effectively, the land as a percentage of the whole development is tiny when in comparison to a normal deal. So they're very less elastic on the land. So if it's near the power supply, and if it's the right size and it's in the right zoning, then what we've seen transpire the last few years is these groups have come in and bought off the institutional groups, so bought off existing landowners for pretty big premiums. But because they're so elastic, because the build's so big, it's okay that they've been paying those premiums. And it's actually created a bit of a spike in land values over Sydney. And of course, every vendor in town wants the white knight of the data centre to come in and acquire their land, if indeed they're a seller. What we're seeing now is a bit of a change on that, because I think a lot of the landowners, it's not really an awakening, but their understanding is deeper, that maybe what they have is a very valuable commodity. And I think you'll find a few more of them might well play a bit more hardball in terms of not selling land and creating situations whereby they provide a core and shell, or they do a long ground lease or something like that, just so they can maintain the land, because if it's it's been so valuable. And I think also too the data centres will move on from that, and you will see a mix of deals where they will continue to acquire land, but also they'll be a little bit more comfortable, particularly with the counterparty being of the stature and have got the capacity to be able to develop and deliver those facilities and have the capital, because it is now billions. It's not 50, 80, 100 mil, nor is it 2 or 3 or 500 mil, it's billions. So the counterparty risk is very much at the forefront of their questioning. If they are to enter that partnership with a landowner, has that landowner got the capacity to actually deliver what they need? And that's sort of emerging as we're going on.
So I think what you're both talking to there is scale, very large scale. And so when I think, given our audience is a high proportion of our audience will be real estate professionals familiar with the development model that underpins different sectors, and we all know there's a lot of residential developers, there's a lot of industrial developers, there are fewer but still quite a number of office developers. Something like shopping centres, there's probably fewer again in the sense. So data centres sounds like it's more toward that end in terms of the number of players that can be active as large-scale developers in that space. I mean, how many are we talking about in Australia?
It's a handful, right? Yeah. There's no more than that. Because the other thing we've got to, I guess, understand is the human capital and the IP and the technical skills that are required to deliver these things. I mean, you talk to the tier one builders, and they're constantly, seeking to try and maintain their key staff, particularly obviously the electrical engineers. They're very hard to maintain, and so it's a constant battle for the tier one builders who are, I guess, subservient to the landowners to be able to enter into a contract with those guys to be able to deliver on time and on budget, because at the back end there's pretty serious penalties that are imposed by the data centre developer on those land developers, because if they don't deliver on time, then every day counts, every minute counts. It's not a monthly thing. So the whole supply chain of it, is critical, particularly around the timing.
So there's there's challenges there that you've alluded to in terms of labour cost, material cost, and we're all familiar with that in terms of the high inflation we're experiencing, and high construction costs have been a big part of that. So I mean, how is Australia perceived, Fred, in terms of those challenges we've been talking about in our market for the past couple of years? Is that, I imagine it's not unique to Australia, but are the challenges that we've got compared to other cities in terms of delivering on this capacity, are we relatively well placed, or are we one of the more challenging markets in which to develop?
In general, across Asia, actually, Australia's looked at as one of the more positive markets to develop in. The Transgrid, in a way, is actually seen as much more reliable, in particular compared to a lot of the tier 2 markets in Asia. In the likes of Singapore and Hong Kong, very, very geographically constrained. The data centres in Hong Kong all have to be built up in very, very thin buildings, so those cost significant amounts. Singapore's ultimately banned data centre development over the last 3 or 4 years due to the environmental pressures and the energy usage. I think in 2019 data centers used 12% of Singapore's energy. So actually, in general, Australia...
It's a high proportion.
Yeah, exactly. So in general, Australia and Sydney, Melbourne are looked at as quite positive to build and transparent societies to operate in. But clearly, with the scale in terms of multiple hectares needed to be acquired now, things get very difficult in any market at that level. So you've also got a bubbling industrial market. So actually, it's not just data center developer versus data center developer on open market bids. It's actually multiple industrial developers in there as well.
So to what extent are we, I mean, my question perhaps suggested that we're sort of competing with other cities, if you like. I think we all have in mind, we've all been seeing what's been happening in the US share market, the rise of NVIDIA, and so I suppose we're imagining that we're in a global competition with other cities to be the city of choice that's going to service the APAC region. So is that an oversimplification, or is it do these businesses need to come to Australia out of necessity because the size of our market in its own right justifies it, or is it more of a game when where we're competing to be the regional hub, if you like, to service an APAC market?
An interesting example is looking at what happened when Singapore banned data center development in 2019. All of that demand then went into Malaysia. So it's not just a case of local demand being built here, it's actually more regional demand. And with Australia being a very Western-focused economy, but in the East, ultimately in the Pacific, a lot of the deployments happening within Australia will not just be Australian-focused and actually look at it from a regional perspective. So, no, in general, Australia is seen as an easier market to operate in, but the barriers to entry from a regional investor looking at Australia on a data center perspective is the fact that you've got a very, very strong selection of local data center operators. So, you touched on AirTrunk, but the NextDCs, CDCs, Macquarie's have been very, very strong over the last 5 years. So a lot of, say, your Singaporean-based operators are saying, actually, that's a very, very hard market to operate in because NextDC and AirTrunk have such a strong land bank and such a strong relationship with the hyperscalers, which is so important in terms of that tenant relationship. It's very, very hard for new parties to come in.
Yeah, so we're a challenging market to access, as you said there. So, I mean, who are we competing with in terms of, if you're saying so the likes of, as I understand, Tokyo's a large market. You say Singapore has, I'm not sure, is it a moratorium? I'm not sure if that's the right word, but they're effectively saying they're not going to have more. Hong Kong's quite expensive, so there's challenges here, as there are challenges everywhere, but who would be our most direct competition?
So from a take-up perspective, so an absorption rate last year, it was Sydney and Tokyo held the highest, got the top spots basically, which is no surprise when you look at the sort of economic growth of those two markets. Historically, Singapore and Hong Kong took those positions, but Hong Kong's facing its own challenges, and Singapore, they've all but banned development. So at the moment, there's huge attraction with the Australian data centre market. Not just Sydney, we're seeing Melbourne come into the fore, which follows a trend on a global basis of, you looked at the likes of Frankfurt and then Berlin, or Milan and Rome, and London and Manchester. These tier 2 cities are always seen as the secondary hubs in those tier 1 economies, are now becoming much, much more exciting as ultimately the power and the land runs out and prices are going up too much that actually people think that we can deploy capacity in a couple of 100 miles away or a couple of 1,000 miles away in the case of Australia at a similar cost.
Exciting. So I mean, it sounds like we are relatively well placed. If I do make the simple observation, you mentioned a number of European cities there which are presumably competing, whereas it seems like there's a smaller number of large APAC centres. And so even though we've got some challenges, there's a tremendous opportunity. But on the challenges, I think we've all heard how much power, and you gave a number there in the case of Singapore, Fred, quite remarkable in terms of the proportion of the overall power usage in that country. But how is Sydney dealing with that, Angus? I mean, how are you seeing a pathway to sort of be able to deliver at the sort of scale that Fred's talking about?
Yeah, look, it's a problem, right? It's an issue that Sydney's facing, not only from a data centre development, just from development generally, let alone you overlay this this massive push from DCs to come in, and we have a problem. But talking with everyone in the marketplace, it doesn't seem to be a lot of stress. The good old Aussie can do is really coming in, and I think the government seems to have forward planned. Invariably with the DCs, there's a runway and a take up of that is changing, and Fred can sort of expand on that. But effectively, the DCs will take some space and take a certain amount of megawatts at a certain point in time. So when they open, that's okay, and then they'll grow over time. And as that growth comes in, the amplification of the power also is in step check with that. Also, too, it is a slow process. So you don't just go buy the site, build a data centre, and sort of up and running in 9 months' time. There's a lot of lead time that's required. There's a lot of supply chain that needs to be tapped into just on the actual hardware. So there is a certain amount of time that is planned for, and everyone has got themselves organised around that as well. So there's going to be ongoing issues around power, and does nuclear come into it at some point in time? Maybe. It's a possibility, because there's going to be a constant thirst for it. I'm sure we can't sort of keep up with that on the current trajectory. It's just not possible. So it'll be interesting. But so far so good, and there hasn't seemed to be too much of anarchy prevailing. We seem to be getting through just okay, but clearly that's going to change, particularly with the advent of AI. And if we look at the numbers and if we listen to the experts, then it's coming. And I'm sure the powers that be are certainly up at night working it all out. But I'm not seeing any crazy sort of punchbacks yet.
Well, I mean, how many can we realistically deliver? It does sound like the constraints on the supply side will influence to some degree the speed with which we can meet the demand side numbers that Fred has alluded to. But if I was to sort of over the next 10 years, say in Sydney, if we're talking about schemes of the scale of billions of dollars, are we thinking that's going to be 1 or 2 a year or more than that?
I don't think it's. I think it's going to be very rational. There doesn't seem to, you talk to various people and it comes and goes like any property development. There's a mad rush, and then the sort of equilibrium gets met, and it goes quiet for a while. So yes, there's a lot, but as you say, it's a handful. It's not 20 or 30, and I think, as Fred's alluding to, it's getting bigger too, and the bigger are getting bigger, and they'll probably be able to handle that sort of demand. So I think what we've seen in the last 4 years, yes, there's been a rush. Yes, there's been a lot of intense development and a lot of focus on it, but we've managed, and I think we'll continue to manage as well as a marketplace.
So changing tack slightly, I mean, given you've talked to the capacity issues, you've talked to the potential growth in scale. I mean, I imagine we're all working in real estate, and so we're imagining the sorts of questions that we'll get asked around the investability of the sector. And given such a strong growth trajectory, it's a natural question to ask. But given the scale of the capital investment and the long-term nature of the lease or the operational commitments, I imagine it's a long-term hold, but we're not going to see a huge amount of active trading on a quarter-to-quarter basis. So I'm just interested in your perception of the investability of the sector. Perhaps start with you, Fred, and then perhaps that segues into a conversation about around to what what's keeping you busy at the moment. Is it working with operators to find appropriate schemes for them, or is it on the investment side?
Thanks, Ben. Ultimately, the reason there's such appetite for the sector from the investment world is the asset class has one foot in real estate and one in infrastructure. So it perfectly ticks the boxes in terms of being a physical asset that you can, see and touch, and the values within that physicality. But on the flip side, you've got 20-year, 25-year leases to the best covenants in the world: Microsoft, Amazon, Google, largest US companies, and the Chinese on the same way. So everyone in this sector is looking for reliable income from solid covenants. That's what the data center market can offer you. But as we've touched on all today, the barriers to securing that are very, very tough. In terms of accessing the sector, again, deep pockets are required. So your standard local developer can't do that. But ultimately, when we're speaking to people who want to access the data center sector, the first thing we say to them is actually look at your existing portfolio, because we've spoken to a number of landlords that have said, look, we want to, buy some land and secure some power and potentially a DA, and then look at what we could do with partnering up with a data center operator on a joint venture basis, which is what we're seeing more of across the region now as the scale becomes so big. Often we find that actually there'll be assets within their portfolio that lie in very, very attractive data center locations that they won't have known about before, because these availability zone structures are very mysterious to to most people. So actually what we find is there's a huge premium on land in certain parts of Australia that are closely connected via fibre and existing assets. So we'll see either the likes of these large joint ventures, operator, industrial developer, and plus sovereign wealth fund or big PE-backed institutions to come in and provide proper firepower on the AI side, or it's a case of just the industrial developers looking at their existing portfolio saying, we could bring in some expertise from the operators, from the cloud, proper in-house power procurement expertise, and then actually look to develop either powered shells on behalf of data center operators or triple net lease them directly to the cloud. So the structures that people are accessing the sector is changing, but ultimately where we see the sector in the next 6-7 years is ultimately the cloud. We see business as usual and still very early days in its development, but also we'll start to see new locations cropping up across Australia as investors just search for that speed to market and that discount on land that they would pay in other parts of the world.
What about you, Angus? I mean, Fred's talked to the spectrum there from small scale to large, both in terms of scheme type, land size, and type of investor. Where are most of the inquiries coming from for you?
From the investment point of view, or?
Yeah, from the investment point of view, and I suppose also from a developer point of view, from an industrial developer looking to access to grow scale in data centres.
Yeah, sure. So certainly there's no lack of capital. There's an absolute wall of money looking to back these things, but obviously it's selective. But the developer first needs to, as Fred said, look at the existing land holdings. What we traditionally do is to get them to run a architectural scheme over the top of the site that they may have, with a data center specific architect to make sure that it's a functional and marketable scheme that fits within the planning parameters in terms of height and FSR and those normal things. And then ordinarily, the suggestion is to talk to a power consultant that then goes to the local utilities provider and then marries up the amount of power that Floor or the GBA can actually provide, so that if they are to go to market, they've got a scheme that's approved. They've also got a marry up with a power that goes with that scheme. Then they've worked their way far up the value chain, and they've got a marketable commodity to the DC developer. And then if they were to strike a core and shell type lease situation, yes, it is hundreds of millions, if not billions, but it's almost the least of their worries, as opposed to, say, trying an office development right now. You've got Buckley's. Industrial is slightly different. It's more the market darling, but certainly for a data centre development, if you have got the land, if you've got a scheme, if you've got a power, and if you've got the interest from the end user, money's the least you worry. It is the absolute market darling, and there'd be a wall of money chasing each of those deals. But that's very hard to construct all that. But that's the developer's dilemma. But if they can work their way up their value chain, then certainly they're in business. But it's not that easy to do.
Now, one in closing, gents. So I'm conscious we all, I'm sure, have seen some some strong growth projections around the demand of the growth of the sector, and it's challenging for supply to meet that. But then at the same time, over time, whether it's nuclear or more efficient new technologies that come in that are less power hungry, that I suppose has the potential to make that growth in scale more deliverable. But where do you think we'll be in 10 years? Do you think we will eventually meet those optimistic demand side projections with better technology that enables us to do it, or do you think that we're going to have to hit some limits at some point, and ultimately, whether led by government or supply side constraints, that we might have to introduce more in the way of user charging? Heaven forbid that'll cap out that growth.
I'll just start there, particularly with the planning. We've already seen in Macquarie Park in Sydney the recent changes in the planning, where they've actually asked that there's limitations to data centre development. So I think you'll see that there's more considered planning structure around where they can go. I think that's pretty evident. But from a behavioural point of view, it's interesting. There's chat in the market now about that changing. There might be an imposition from the data centre users on how much we use, and do we all need 9 photos of a cat sitting on our iPhones? I mean, that most likely will change, whether it's imposed or in fact it just has to be behavioural change, because we can't have data centres taking up land that are really hosting a whole lot of unused and unwanted data. But no one really wants to be the person that sort of kills that piece. Everyone wants to have access to that. But I think it can't go on forever. And I think you will see some change around that, because simply we'll run out of space and run out of land. We're not there yet, but I would say that's coming.
I imagine the experience of overseas will guide us to some degree. I take your point. No one wants to push the delete button, and no one wants to start charging $10 for every AI-generated image. But where do you think the bigger cities, Fred, to the extent we take a lead, where is London and the like going to end up? Where do you think we'll be in a few years' time?
So London's actually taking, the new Labour government are taking quite a proactive stance on data centres. So instead of seeing them as the enemy, are actually saying, there's massive investment coming into London from international investors on the data centre side. How can we work hand in hand with them to make sure that, local authorities are happy, but also, the country's being invested in by and having that sort of technological growth. So recently what the UK government have done is class data centres now as critical national infrastructure. So same as an airport or a hospital or, a major arterial motorway. So data centres can shoot through planning very, very quickly. Now that's very, very positive in the sense that you won't get held up at a local level by, constraints from residents, et cetera, But the next step needs to be actually governments on a global basis outlining formal data centre zones across countries, whereby actually realising that these assets need to be developed in areas that have very, very strong power infrastructure, and working with the investors, the operators, the governments and the local power providers to deliver effectively the full suite of offering to the operators to then go and make life as easy as possible to develop there. So as Angus said, the numbers are getting too large and the competition on land and power is getting too big. And Sydney at the moment is a 3.5 megawatt market. 5 years' time will probably be 20. That's a conservative estimate, 100%. But what it will need is at a proper government level, working hand in hand with the operators to understand how best to deliver that space. Because the worst thing they could do is ignore the demand and ignore the investment, the wall of capital that's looking to enter the sector. But there's got to be understandings that you can't turn the whole of Sydney into a data centre. Otherwise, that would anger a lot of people. So in general, the sentiment from the investment side and, importantly, the customer side is very, very positive. And, it seems like a market like Sydney is starting to get hold of the fact that from a planning perspective, they need to limit data centres in some areas, but then the bottleneck needs to be loosened in other parts of the market in terms of helping these assets get planning quickly. So, all looking positive.
Indeed. Lots of interesting discussion there, some unanswered questions, but these are opens up a whole lot of issues, not only for real estate, but for us all, for policymakers to grapple with over the next a few years. But it does sound like a tremendous opportunity, and one where we are well placed compared to other cities around the region to take advantage of. Thank you very much, Fred and Angus. We trust that's been interesting and look forward to you joining us for our next property perspective. But thank you for now.
Before you go, subscribe to our channel so you don't miss out on the next episode of The Property Perspective, when we'll be back to share our take on more key trends and topics shaping Australia's property market. You can also follow us on LinkedIn or visit our website at knightfrank.com.au for more information. Thanks for tuning in. It may be the end of the show, but we're always your partners in property.